Hello guys and welcome to Hakman Traders. In this video I'm going to be showing to you Ichimoku Cloud. What is Ichimoku Cloud? Now Ichimoku Cloud is used in the trading is an indicator used for to determine the direction of the trend to know what's happening in that particular stock. So that I'm going to be explaining to you in these videos. So let's get started. Now if you want to plot Ichimoku Cloud, simply just go to your indicators, scroll down. Yes, over here. Right here, Ichimoku Cloud. Click on it, and this cloud, these lines, these clouds, this is the Ichimoku Cloud. Now, if you want to understand the Ichimoku Cloud, the red line, as you can see, this is the slower line. This is called the Ki, Kijun Sen, or Kijun Sen. The blue line is this is a fast moving line. This is called the Tenkan Sen. Yes, the Kijun Sen and the Tenkan Sen. This is called the Chiku span. Now these two lines both determine the direction of the trend. What's happening in the trend? These two indicate that. Now if we consider this line, this specific line, the Chiku span A, this line is the exact replica of this trend. Now as you can see, this was, if I move this line over here, then this will appear as the same exact thing as these candlesticks show. So this is the same exact of the candlestick, but it is 26 bars behind this trend. So that's the difference between these two. Now this cloud thing, this is known as the Kumo cloud. I'll be referring this to as the cloud in the rest of my videos. The red line, the green line, Chiku span A and Chiku span B. These two are Chiku span. Chiku span A, Chiku span B. Now these two lines, the Chiku span A and the Chiku span B, does not play a big role in this particular area, but the cloud plays a big role in identifying these trends. So if you want to know the direction of the trend, now whenever this blue line, the Tenkan Sen, crosses above the Kijun Sen, then this means that this trend is will turn into an uptrend. Now at this level, it did cross the what is called the blue line. Sorry, I'm forgetting the names, but I will say the red line and the blue line. Now the blue line crosses the red line at this area, but as take a take a look at it, this red line at this level, it is straight. It's haven't been bended. Now this means that the market is in indecision phase, that the investors are not deciding on what to do what to do about this trend, whether to buy this trend or sell this trend. Now this line is shows specific that the market is in still condition. It may come down, it may go up, it may trend for in that specific place for some time. Now this line, this trend specifically shows that when the line is straight. Now as you can see that as the blue line crosses the red line, it traded for it moved for some time in this direction, then again it dropped. Because why? Because the key in the Tenkan Sen shows that the red line shows that the market would be in still condition, or either it will drop. So it dropped at this level. Whenever these type of things occur in your trading, make sure that the when remember keep this in mind, that whenever the red line is straight, it means that the market would be at a still condition for some time, or maybe at that place for a while. It may come down or make, but it specifically means that it will come down. But at this level, the blue line won't do anything, because the red line plays a big role at this area. As the red line moved above, the price starts to come down. But as uh, the blue line crosses above, is again the same red line, the same still red line at this level, means that the market was at still condition at these areas. But after this, as the red line starts to move upward, the blue line also moved upward, moved even faster than that, showing a great distance between these. Whenever the distance is larger, it means that the prices will be much higher, and it will trade more, traded morely in heavy amounts than traded morely in heavy amounts. The same is with the Kumu cloud. Now if the candlesticks are above this cloud, it means that the trend will be an uptrend. If it's down, if the candlesticks are trading below the cloud, it means that it is a downtrend. Now it's trading in a downtrend. Now as you can see at these levels, it's trading in a downtrend. At this level, it was trading upward. Now the whenever if the clouds are in between, sorry, if the candlesticks are in between the cloud, it means that the it means that the market is in indecision phase. Both the buyers and the sellers are not deciding on, the buyers are not deciding what whether to buy in the stock, or they saw risk in the market, the market may go down, they consider that. And the sellers the the sellers also do not sell their stocks because they on the assumption that they think that this stock might go up, and which eventually most of the stocks go up if they have a great financial record and a history, so they do go up. And and specifically about those who want to short their position, they are also in doubt, they also assume that the market would go down, so they do not take any position at that place because it's a indecision phase. Whenever the market goes above the indecision phase, it goes out of the trades out of the clouds, then that means that the market will move in the upward direction, it will be an uptrend. Now if the candlesticks are below the cloud, traded below the cloud, then it's a safer thing to short your position. Now specifically about this area, now these were in this cloud, so it means that the market was in indecision. As you can see at this level, they were in now the bigger the gap, the more volume the traded, the more will be the traded volume. The smaller the gap, the less will be the volume traded. As you can see that the gap is the huge, the gap between these two is huge, the Chiku span A and B. So the heavily the traded volume, and the smaller the lower the volume. As you can see that the smaller the cloud, the lower will be the its trading volume. The same will be in this case. Other than that, it is all the same, so you just have to apply. Now again, as you can see, both of them moved closely. The gap was smaller, so the traded volume was also smaller, but it had huge price upwards. The price moved hugely in the upward direction. Now in this case, the market was at still position, so it dropped. But that doesn't matter because the gap between these two was huge, so it doesn't matter, and moved upward. Again moved in the upward direction. Again the same thing happened. The still position, so the market dropped. Now this is in indecision phase. Now as you can see, this is a great example of the market that it's in indecision phase. So you do not want to buy and you want to invest in this position, so be careful, take a look at this position. This is not a great position. If you want to buy at this level, do your risk management, so to not get blown up your account. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.